It is another wild day, as we've been talking about on Wall Street, after President Trump made a major announcement about his sweeping tariff plan, placing a pause on most of those tariffs. While the markets saw this as a positive and surged today, they are still down considerably.
And there is so much uncertainty for Americans as they plan for their futures. With a look at what these market swings mean for you, CPA and financial planner Ben Micham is here with us live. Let's begin with the question on so many people's minds. This huge positive swing today after record back-to-back losses last week. For folks worried about their retirement, does this today recoup those losses?
Well, certainly it puts a big, dent in what you're down last week. Who knows what's going to happen? I mean, everybody's still. The market's still volatile. Everybody's still worried about tariffs and the economy and inflation and the world economy about what's going on in the world. So I think you just have to be careful about overreacting. Think about it. Last week, if you got all scared and got out of the market, you just missed, a 10% return on your money. So you have to be careful. You have to pay attention to where your money is. And hopefully you diversified well enough in retirement to know that you have to have your money in different pots so that it does different things.
There are some people in my age group who have parents who are at that retirement age. A lot of them are having the conversations now as to whether or not they should retire now, or if they should extend their work careers a year or two just to see what happens. Is that overreacting at this point, or does this volatility give them justification to start thinking that way?
Well, I think that, I've been doing this for 30 years and I've seen some ups and downs with Y2K and the mortgage crisis. I think that you can't overreact. You never know what's going to happen. I think that we're still a pretty strong economy. Hopefully you don't have to work another year just because of this, week or two of volatility. But I don't think it's stopped. I don't think it's over. Just because we had a change today doesn't mean that's what's going to continue. So you just, you have to, stay the course. A lot of financial advisors are going to tell you that. And so hopefully you somewhat prepare yourself for this kind of volatility.
And markets do not like uncertainties, certainly. We have so many viewers with families who also may be thinking about the future, potentially investing for their children. So how might you suggest they navigate this moment? Should they also consider diversifying, as you talked about, or maybe pause?
Well, I mean, think about where we were last week. The market was down. So you always want to, if you buy and hold, you want to buy low and hold it. So I don't think the short duration, the short problems is what you need to worry about, especially when you're investing for the long term. This has happened many a time. Normally markets aren't down more than about a year and a half. So you have to think that and just stay the course. And hopefully you're a long-term investor and you just ride these ups and downs and you stay in the market and you continue to invest along the way. Obviously this, whether you buy the dip or not, I don't know, but you want to stay the course and keep going and look at where you're investing and whether it makes sense for what you're trying to invest for.
Well, Ben, thank you so much. We appreciate your insight and your time talking to us and our viewers today.